the terrible investing information out there is pretty overwhelming. I'm seeing way too many channels that are teaching investing, but then when you look at their portfolios, they're majority positioned into some goofy strategy ETF. Then they'll say something like, hey, watch me teach you how to invest. Well, first, we give Ricky my money, and then I pay him X percentage, and he does this awesome butterfly, spread, strangle, dink-doink option strategy, and we crush the market. Come on, guys. Investing should be one of the easiest things you ever do. There's no need to get fancy. If you're paying someone, they better be absolutely destroying the SPY. And I don't mean edging it out. I mean scorched earth destruction. And that's where I was watching this other YouTuber going by the name of the Retired Lazy Investor. And I'll give him some kudos. He built this extremely over-engineered spreadsheet to track his ETF activity. And then I was listening as he was going on his explanation of his 7-year journey. And I couldn't help but think about myself, and had I just remained in the ETF that I was in, this could be me in an alternate timeline. And then he's talking about his investing journey, but I'm just looking at these tickers and I'm like, okay, you went from a covered call ETF into another covered call ETF into another covered call ETF. You could hear the pain in his voice, and I empathize with it, but then at the same token, I'm realizing he never learned to become self-sufficient. He spent years just outsourcing this to other people, and this is supposed to be his journey. Most of the ETFs that he was in, they underperformed. 4 out of the 7 years, he was better off just investing in the SPY. One of the years, if you take out the expense ratio, it becomes 5 out of 7. And then I'm realizing, okay, at this end of his 7-year journey so far, what has he learned? He's committing heavily into ULTY. So I was a little disappointed. Man, you all know I love bashing the trash stock that is ULTY. Just as a quick example, let's compare SPY and ULTY this year. SPY's up 14%, cool. ULTY is up 18%. It sounds good until you realize that if you used it for weekly income, well, you actually underperformed. So you have to be dripping everything back into this thing just to be winning by a little bit. And honestly, if you just dumped $10 weekly into the SPY, well, guess what? You matched it. So it's just not impressive. So I want to get into my core whiskers. So the first one is the stock on an uptrend. This one is as simple as it sounds. Just look at the chart, put it on a bigger time frame. You don't need the daily, you need to be looking at a weekly or monthly. Put it on 5 years or more out, and then check. Is the overall trend an uptrend? Don't overcomplicate this. If it's not on an overall uptrend, your whiskers should be tingling that it might not be investment worthy. Core whisker number 2. Do you use it, or does someone you know use it? This is also extremely straightforward. For example, I know that Boeing sells airplanes. I used the airplanes when I was in the military, and that's great. But when we check Boeing on the bigger picture, this stock is a mess. So right out the gate, most likely not investment worthy. This is also why I have a bigger issue with crypto for long-term investments, because after nearly 2 decades, I still actually haven't seen who needs this thing. It's fine to trade, but I also would classify that as not investment worthy. Core whisker number 3. Don't get distracted by shiny thing. This is why I strongly dislike listening to the news, and also the vast majority of these garbage ETFs. Look at this shiny high yield. Well, we're gonna give you out of the kindness of our heart. Or news headlines screaming, hey, this stock is up 1,000%. You need to get in now. It's most likely a trap, and you're just exit liquidity for them. Now, if you hear bad news on an investment-worthy stock, and it's pulling in hard, absolutely be looking for an entry to get on board. but don't get caught up in someone else trying to force the feeling of FOMO on you. Investing should be extremely boring. Anyone trying to get you excited or euphoric about something, your danger receptors should be tingling on your whiskers as well. Core Whisker number 4. Buy the dip on an overall uptrend. Most people get caught up in trying to have that perfect timing. Sorry to be the bearer of bad news here, but only one person ever gets that absolute low. But the beauty about investing is it falls in the realm of horseshoes and hand grenades. You just need to get close and you can still win big. But once again, make sure that the stock is in an overall uptrend. A good counterexample is in my former life I worked at UPS. So I'll use their stock as an example here. And it's what it shouldn't look like. This thing is dipping all the time, and if you were buying the dip, you'd be getting absolutely destroyed right now. Sorry, I love you UPS, but you're not investment worthy. Core Whisker number 5. Stay in your lane. Be that boring investor. You won't have any hidden information up your sleeve that the market doesn't already know about. You'll never beat these algos on the 1-minute time frame. Leave day trading tricks for the day traders and be happy with your big green buy button, then wait your year or more to sell. As long as you pick an investment worthy company, you'll win your bet. It's just a matter of time. There's plenty more things I could list off here, but I think those 5 should serve as an excellent foundation. So I'm going to construct my own little ETF together right now with only just good companies that I know off the top of my head. I know that they're in a 5-year uptrend, and that's about it. I haven't looked at any of the underlying, what their PE ratio, none of this goofiness. It doesn't matter. The market has it priced in. They know what they're doing. So we'll split up in 2,000 into each one of these stocks and then see how we compare to ULTY and the SPY and all these other ones at the end of it when I sum it up later. So we'll start off. First one, we'll go with Coca-Cola. Alright. Everybody knows what Coca-Cola is. You've drank at some point in your life. We all have. Next one we'll do NVIDIA. Because if you don't know the biggest company out there, I mean, something's wrong with you. I've got a graphics card in my computer. It's NVIDIA. Cool. For the next one, we'll go with Netflix, right? Another big company. Everybody's watching it across the world. Alright. And let's see. Oh. We throw away a lot of trash, so waste management. We'll chuck that in there too. I know it's a good company. And let's do one more, right? Let's do, oh, that's right. We have cats, so cat. Alright. So there you go. There's my ETF that I took painstakingly amounts of time to put together. Remember, if you use any of these in your thing, you have to pay me 1% going forward, because I hand selected these using my patent pending MMC strategy. With my extremely generic 5 big name stocks, this ETF that I thought up would have had a combined return of 24%. Which is already crushing all these other ETFs that are doing these crazy dink-doink option strategies, charging high expense ratios, and all the other gimmicks. Worse still is that this 24% would have been without even looking for a good entry point. It's simply just blind buying at the beginning of the year. For any of those that are actually curious, my trading return is looking at 69% for the year so far. But hey, my financial advisor is a cat, so what do I really know? Leave your thoughts in the comments. Okay, Rick and Nelson, are you impressed by ULTY? Are you going to take this trade? Are you going to hold it for the next 20 years? No, you don't care? You're going to look for something else? Yeah, I agree.